Wander Wealthy Podcast, episode 119. Welcome to the Wander Wealthy Podcast. My name is Tess. I'm the host and so excited for this episode because we're doing it live in the Wealthy Entrepreneur group. So those who are in the group get early access to this show. As I mentioned before the recording, this is a test run and we're going to see how it kicks off, how the recording ends up coming out. And therefore, if it does do well, then as a bonus of being a part of the Wealthy Entrepreneur Facebook group, you get access to my solo shows earlier than when they do go live on the podcast apps and on my website. So that is super fun. It's also unfiltered and unedited, and you can even show up live and ask questions if you want. Otherwise, just get all the content before everybody else, which is super fun and exciting. Today, we're going to be talking about creating consistent income from your business. Now, it's super important that I make it very clear that it is from your business, not into your business. This is really important for me to touch on because I find that most of my clients, most of the people that I end up working with and talking to, they no longer have trouble with getting clients, of getting sales, and they're more up-leveling to the issue of, now I don't know really how to manage the money that's coming in and figure out how to manage the expenses that are going out, as well as how to pay myself a regular salary and all the other things that go and are involved in managing your business finances. So it's not the struggle to bring in more work, to bring in more clients, to get known and get exposure to the world and let people know that you are a coach or that you are a service provider online, and to get those people to buy from you. That's something that they've overcome. Now, I understand on one level, usually within your first year of business, that is a struggle you might have. This particular struggle, creating consistent income from your business, is a struggle that most people have between years 2 and beyond. 2 to 3 years is usually kind of the sweet spot, but even 4 or 5 years until they really usually hire more people to help them build out these systems. And that can be where I come in. So if you don't know me, if you're new to the podcast or you're new to the group, my name is Tess. I'm the host of the podcast, and I am a wealth and mindset coach. I help online service-based entrepreneurs, online coaches especially, really make and manage their money with ease. I take the practical aspects of implementing a system and a rhythm and all these processes and, using my spreadsheets and my super analytical skills that I've acquired from working in finance for many years. I take that and I blend it with the skills I've acquired from being a coach and realizing that people need more than just a really great system or a really great process. I can give you the best budget in the world, but you're not going to follow it. You're not going to do it if you don't have your mind right. And so from a mindset perspective, it is super important to make sure that you are dealing with money stories of your past. You are dealing with understanding your limiting beliefs and what's really been holding you back, and maybe where you've been sabotaging your own success because of beliefs that you've been holding on to, and how to overcome those. So I am working on a certification in life and success coaching, neuro-linguistic programming, which is really understanding how our brain works and how we see the world or feel the world or think about the world, as well as EFT, which is emotional freedom technique. It's a way to release these deep-seated and deep-rooted emotions and beliefs that we have around money, specifically if we're working together, and hypnosis. So how do we reprogram your mind to make it feel and really help you believe that making money can be easy and effortless, that managing money can be easy and effortless, and so many other things that trickle from money. And so I believe we need to, and especially if you're working with a coach, you need both those practical strategies, a coach that is going to help you implement a system that makes doing all of this work easy and seamless and organized and, very well put together, but also you need to manage your mind. You need to get an understanding of how your mind works and how you approach money, and understand and have awareness around how you act under certain circumstances and certain situations so that you can make better decisions going forward. And there's so much detail we can get into that, but that's not the premise of this podcast specifically. What we're doing today is talking about how to make consistent income from your business. But those two aspects are really important, and that's why, I believe that my coaching and my approach to coaching, working with individuals and entrepreneurs, is super different. Okay, so let's talk about the creating of consistent income from your business. Now, as I mentioned, we're not really diving into how do you make money in your business? How do you get revenue? How do you build up that revenue and get sales and clients and start making money in your business? That's an entirely different story, podcast, learning lesson that maybe I'll touch on in the future, but really my main clients are focused. That's not their worry anymore. They've overcome that, and now they're focused on how do I organize my finances and pay myself regularly from my business. Now, there is a little caveat here. If you are just starting out, this still might be an issue for you. And I do think that you should be thinking about creating a consistent income from your business, even if you don't feel like you can afford it, if you don't feel like you have enough in sales. And there is a way to do this. And that is based on the percentage model. Now, I teach a percentage model in my payday parties. And you guys, I haven't talked a lot about this, but I will at the end of this podcast. My payday parties are a super fun workshop style party. It's going to be a week long. It's a lot like, if you've heard about the guilt-free spending system, it's a lot like that, but rebranded. And you're really going to understand and learn how to set purpose-driven revenue goals, how to determine how much you need to make as a business owner from your business, and then how to implement the system that I help my clients implement so that you can pay yourself regularly. And it's based off of this percentage system. So even if you are in your first year or you're just starting out, you're getting your clients, but you want to figure out, how do I pay myself? And you want to do that before a lot of people even feel like they're ready. And you really should be doing this. Like, that's the side note, is you really should be paying yourself regularly. So if you're in that position, you can do this. You can figure out what percentage you need to pay from your revenue that comes into your business, and then you can directly pay yourself. And even if you're just starting with paying your cell phone bill or covering half of your rent while maybe you have a full-time job that covers the other half, or maybe you have a partner who's helping you cover the other half, or maybe you just want to contribute to one small thing out of your business, you can absolutely do that from day one, and you do it based off of this percentage system. Hi, Anna. So glad you're joining us live on this live podcast. So we're talking about creating consistent income from your business. And even if you're just starting out, it is totally possible to do so. So if you're just starting out, you can, first of all, no matter where you're at, you can download my Easy Profit Roadmap. It will walk you through how to set those purpose-driven revenue goals, which we dive even deeper into when we go through the payday parties. And you can get the roadmap by going to not Wander Wealthy Podcast, just wanderwealthy.com/roadmap. And I will link it in the description of this episode so you can get at it there. And then that will lead you to more information about the payday parties and how we just get even more into detail about how to implement these super easy systems. But also in the payday parties, we implement that mindset work that I talked about at the beginning of this episode on why it is so necessary to have so that you can truly see your wealth building and see your business growing. Okay, so if you are just starting out, you can still pay yourself consistently and basically just find that one small thing that you want to be able to pay, figure out what percentage of your revenue, and you can kind of find an average revenue on a monthly basis, and then take that money from your revenue and send it straight from your business bank account into your personal checking account, and there you go. You've paid yourself. Now, you want to try to do it on a regular basis, but that's something that we can talk about in a future episode or within the payday party. Okay, but like I said, most of my clients are past the point of just trying to kind of scrape by. They usually have enough money in their business that they could be paying themselves, especially to pay themselves to cover a lot of the expenses that they have in their lives. So basic necessary fixed expenses like rent, utilities, debt, insurance, cell phone bill, gym bill, and even some of the variables like gas and groceries. Those are all things that they need to cover from their business. Now, here's what most entrepreneurs, online business owners do is they have their business bank account. Maybe if they're not there yet, they need to get there. But most of them do have a separate bank account for business purposes. It may not be a business bank account in quotes. It might just be a separate bank account. It might be technically a personal bank account, but it's for their business. Now, if you don't have that separated, that's something you definitely should do. I've talked about that in a Facebook Live within the Wealthy Entrepreneur. So you can join the group and find that Facebook Live where I dive in deeper about the difference between business and personal bank accounts and why you need, at the very least, just any separate bank account for your business. But most online entrepreneurs will have this separate bank account. But in order to pay themselves, what they'll basically do is go, oh crap, I need to pay rent this month. I'm going to take that $750 out of my account to pay rent, or whatever your rent bill is. Maybe another bill comes due. Oh, I need to pay this. I'm just going to transfer that money from my business bank account into my personal bank account. Or maybe even they have a little bit of confusion, which makes things even more unorganized. And we want to avoid this, but maybe they're using their business credit card or debit card, or they're using a personal credit card that's still linked to their business bank account to pay certain bills that come up. This is a disaster. This is something we want to avoid. And if you are doing that, it's okay. You can start from, and it's not even starting over, but you can start changing and making these changes and implementing these organizational systems so that you can make it easier for yourself to do your bookkeeping, or make it easier for yourself to go through tax time, or make it easier for yourself to make really strategic business plans so that you can grow and build the business of your dreams. A lot of us, I read this quote really recently that a lot of people are accidental entrepreneurs. They build businesses by accident. So they don't have those systems, strategies, or plans in place to take their business from where it is today to where they ultimately want to be. And that's the difference between an accidental entrepreneur who builds a business and it's kind of hitting these milestones, but then it never gets beyond that because they lack the organizational system, the plans, and the strategies, versus an entrepreneur or even an accidental entrepreneur who sees that that's super important and they go out and they find someone, or they do it themselves, but it's really hard to do things yourself. We know that as business owners, but they usually find someone to implement certain strategies so it is a lot more clear and they have a plan in place of where their next steps are going to take them. That's why for so many people, they'll set a goal that they can see themselves achieving like pretty quickly if they just kind of push the pedal a little harder. And then they'll set like a reach goal, or you might have heard of good, better, best goals. Like the good goal is like, I know I can probably get to, I'm going to set it and I can get to it. I have almost like 90% certainty that it's going to happen, versus a better or a best goal, which is like a reach goal. It's something that it's like you can really push to get to. And once you get there, then it's time to recalibrate and set even bigger goals. And this is so important because as humans, naturally, we need that motivation. We need that strive to continue growing and developing. That is what we are basically programmed and wired to do. And so that's why it's also, again, so important to set those goals. Okay, so most of my clients, they have this income coming in, and they have the means to cover what I like to call, instead of good, better, best, I call your need as the good, want, and ultimate dream or desire. So they have the means to at least cover their need goal. And so what I have them do is really sit down and set what these need goals are. What do you need to make an income as an employee of your business to cover your costs in your life? And so, as I mentioned earlier, those are things like your rent or your mortgage payment, your utilities, debt payments, insurance bills, cell phone bills, gym membership, other variable things like gas and groceries that you can like basically just generally, we know how much we spend on gas and groceries. For others, it fluctuates, but kind of get an assumption of what that would be. And then anything else that is an absolute fixed expense mandatory need. For some people, maybe the gym membership isn't mandatory and they cut that out. For others, like myself, it is definitely something I need to keep my sanity. Maybe for other people, it's therapy. Maybe it's both. Maybe you need both gym and therapy, whatever it is, but it is necessary. You can include that. Now, there's other things beyond your need column, like maybe you want to save for something specific, or maybe you want to just increase your lifestyle a little bit and hire a house cleaner or go out to dinner a little bit more. That's something that you can expand into, but we're not going to do that within the need goal. We're going to do that in what I call the want. So the want is just kind of that next step up. And you can determine the costs of your wants by including your needs and then up leveling and adding how much it costs on a monthly and then take it annual. So we always look at things annually. So maybe you want to hire a house cleaner who is $50 a month, and then on an annual basis that's going to be $600 per year. And you can do that the same thing by, maybe you want to join a exclusive country club or group, and that's going to be $100 a month or $200 a month, and then you figure out what it is on a yearly basis. Or maybe I was part of a kind of country club thing, and I paid on a quarterly basis. So that's really why we do things annually, because on a monthly basis, I don't know how much I need to spend this month for that membership, because actually I don't have to spend anything this month for the membership. It comes due 2 months from now. The same thing happens with a lot of like car costs, like annual registration, or maybe you pay insurance just twice a year, every 6 months when your car insurance renews. Those are things that we often forget because on a monthly basis, we don't know about them, that they didn't happen last month and they're not happening this month. But oh, by the way, they're happening 2 or 3 months from now. So you really want to zoom out and make sure you include everything in both your need. Like there's a lot of things that we need, like car insurance, if you own a car, that you need to pay for, but you don't pay for it on a monthly basis. You might pay for it on a semi-annual or annual basis. So figure out what the cost is for the entire year. So make sure you do that for your need column, for your need goal. And this is an income goal. How much do you need to pay? And then do the same thing with your want. And don't forget, you need to pay for the needs and then just add on your wants. The only time you wouldn't include a need cost is if you were up leveling that cost. So maybe, you have a certain type of car and then you want to up level to a different type of car, or maybe you want to move into a new apartment, or whatever that looks like for you. So I like to identify the need, and then I like to identify the want. And that way I have at least 2 tiers of goals, so that, and for most of my clients, they're already at their need, if not very close to what they would like their business to cover for them. And then they get to, once they, after 1 to 2 months, I would say at least 2 months of being able to afford their need goal, then they get to move into the want. And that is really powerful, because now you get to move to that next level and see yourself growing and know what threshold, what tier you're really reaching for. Okay. I do like to, in my programs, have my clients set a need, a want, and an ultimate dream or desire goal. And so this is quite in alignment with the good, better, best. So that dream, desire, goal is, how much do you want your business to pay you if you were living your total dream lifestyle? And so maybe you're sitting there and you're going, okay, I have all my needs. I put that in the column. I also added in all my wants. But I'm going to tweak some of these things, because maybe instead of me covering only half of the costs in my family, I actually want to cover 100% of the costs for my family. And therefore, if my partner continues to work or chooses not to work, it doesn't matter. If they do continue to work, we would put that money somewhere, or maybe we'd give it away, whatever that looks like. Maybe you want to start giving and you want to start doing some charity gifting, or whatever that looks like for you. You could add that in. Maybe you want to buy a second home or buy your first home. Maybe you want to have a $10,000 a year vacation budget. You would add that up into your ultimate dream and desire column, and that would be your ultimate dream and desire goal. So you're going to total all of these costs up into an annual per year salary that you essentially want to pay yourself. Okay, so this is super important, because now you have a number set in place that you're then able to determine, okay, this is how much I would like to pay myself. versus how much I need to pay myself versus how much I ultimately dream and wish and hope to be paying myself in the future when I ultimately reach that goal. And these numbers are really important because they can help you ultimately define your purpose-driven revenue goal. Because here's the spoiler, your business has to pay your salary for you. I mean, yes, there are caveats. Maybe your partner is helping cover some costs, but I'm sure you ultimately want to be able to cover those costs for yourself. Or maybe your full-time job is covering those costs and you haven't quite actually gone full-time into your business, but you would like to be able to cover all of your costs yourself and not have to work your full-time job anymore. Some people still like to work their full-time job, and that's totally fine. You can kind of figure out, what do I want to cover on my own? And by the way, as I had mentioned, if you're just starting out, you might only want to cover a small bill. Even if you're not starting out and your business is making good money, but you still have decided, I only want my business to cover my rent and my debt payments, and everything else is covered by my full-time job or by my partner, however that is, you can decide how you do that, and that would be your need, and then you can up level to however you want to your want and your desire columns. But figuring this out is going to be really important because your business has to ultimately pay you. So we need to understand, what is your salary on the need, on the want, and on the ultimate desire level as a percentage of the revenue that you make in your business. Hi, Holly. Thanks for joining. This is the live podcast, and we're talking about how to create consistent income from your business. So how you pay yourself. Okay, so your salary is going to be a percentage of this overall revenue that you make in your business. And we want to determine what that percentage looks like. Now, there's other important things you need to consider, like your business expenses, what I also like to deem your business investments, because I truly believe that every expense that runs through your business should produce a return. There should be a very well-defined return and knowledge of, this is what I'm going to get out of purchasing this marketing software, or out of working with this coach, or out of purchasing this course, or out of buying this course platform. So you need to know what you're looking for in terms of a return. And that's why I call every business expense technically a business investment. So you also want to define what those look like on a need, want, and desire basis. And then you'll take that and you'll also include your taxes and your profit percentages that you want to include in your business, because your business has to pay taxes. And the way that I work with my clients in this way is actually to get their business to pay taxes for them on their behalf, their personal income taxes. For most people who aren't set up as a corporation, if they're an LLC or a sole proprietor, then most likely their business, they're paying personal income taxes on all of their business profit anyway. And so technically you and your business are kind of the same person, so you're paying taxes on your behalf. But if you are a corporation, your business can be responsible for paying your income taxes of the salary that you pay yourself on your behalf, which is really cool. And that is the perks of owning a business and being your own business owner. So you want to make sure you also include the percentages of overall revenue that your business has to pay in taxes and what you would ultimately like to have in profit. And then you can boil all of this down to figure out, okay, what percentage of my business revenue am I going to be setting aside for business investments, for profit, for taxes, and for my own personal pay. Okay, so that's the baseline, that's the foundation, that's where we start. And by the way, I mentioned this earlier, but if you want to figure all this math out, because I know I kind of breezed through it, and you really do want to be able to look at something and do the math on your own, you can download my Easy Profit Roadmap. I walk you through step by step how to put that math into play, and then you can identify what those percentages are by kind of looking at, okay, now I know what my purpose-driven revenue goal is by figuring out my ideal personal income, my business investments on an annual basis, and then dividing by taking out the profit and the tax percentages. So that'll make much more sense when you do download the roadmap. And then I do have a video that I send you in an email that walks you through how to do that math. But once you get that revenue goal, then you can figure out, okay, well, how much did I want in personal income on a need, want, and ultimate dream basis? And then figure out what percentage that is of that revenue, so that every time you get paid in the future, you can take that percentage and pay yourself. Now, the big overarching question that I think is everyone is wondering for the purpose of this podcast, for a lot of people, is that consistency part. Because most people, I would say, especially in the coaching world, maybe not necessarily people who are doing retainer-based coaching and are fully focused on just like one-on-one private coaching and are pretty consistent at having, their clients every single month, pay them every single month, or pay them, they would have to be paying them every single month, because alternatively to that, there are coaches who do launches and launch like group programs or launch products or courses. There are also coaches who take upfront payment. And when you're doing that, and this also pertains to other online service-based business owners, you're probably doing some sort of launch, or maybe you get payments in full, and that can really mess with your consistent income and revenue in your business, right? So a lot of questions that come up are, how do I pay my bills when I have a big month, this month, and then the next 2 months are pretty slow? How do I pay bills that are still coming through? Or I have 1 month that is really high in income, in revenue, but then the next month is when I have to pay really big bills, because then I host a retreat for the people who signed up for my program the month before. How do I manage that? And then the third thing is, how do I pay myself a regular salary when 1 month is really high and then the other months are pretty low? And, it might repeat like that on a quarterly basis, or it might repeat like that on an annual basis or a semi-annual basis, or maybe it just goes every other month. Depends what your business looks like. But for the most part, a lot of us struggle with the consistency aspect. So how do you do that? Well, this is where you include something I like to call a drip account, or you could just consider it to be an owner's pay holding account. So I do, and many of you have probably heard of Profit First. I have the book right here. It is one of my business Bibles, and I need to make sure my books don't fall down. I have all my business Bibles on my desk, and I keep them very close to me, but Profit First is one of them. And a lot of my methodology is inspired by Profit First, but I do things a bit differently, and I like to simplify things because I think the simpler, the better. But what Profit First does recommend is opening multiple accounts, and I do think that is really important. I have always taught that with my traditionally employed clients, having multiple accounts, because it is so important for you to give your money a purpose. From a subconscious mindset, getting woo-woo level, that is something that money as a source of energy, if you think of money as energy, it wants to know where to go. Otherwise, it will just figure out where to go, and you will be like, how the heck did I make all this money and now I have nothing to show for it at the end of the year? That happens to so many of us, and it's because they don't set up purposeful places for their money to go. They don't have that organization in place. So although setting up multiple accounts to basically give your money a purpose seems not simple, it seems difficult, and it seems, disorganized, and it seems like way too much work, it actually is the best thing you can do for your personal and your business finances, because you're basically setting up boundaries and then giving a name to those buckets to say, this is only for travel, and you shall not use this money for anything other than travel. And this is only for oh shit moments, and you should not use this money for anything other than when you have an oh shit moment or an emergency, but I like to call it my oh shit account. So that would be two different accounts, a travel account and an oh shit account. In the business sense, you need to have a place where you're putting taxes away, because guess what? That money in that fund, in that bucket, is only for taxes. It is not to pay business bills. It is not to pay your own salary, because taxes are inevitable, and at the end of the year, you're going to have to pay them if you haven't paid them throughout the year. And when you don't have the money to pay your taxes, well, guess what? You owe the government that money, and that can just get you in a whole lot of trouble if you're not able to pay that. Taxes are something you have to pay, you can't get away from. So we want to have a bucket that it has a purpose for that money, which is taxes. I like to do the same thing for my profit, and in fact, I also like to do the same thing for my business investments and then my own personal income. Now, I set it up so that I have money all coming into one account, and then I'm able to apply percentages to send money to my taxes, to my profit, to my business investments, and then I just send money directly out into my personal income. Now, I have a different way of approaching my business than what I'm going to teach you, but I'm also going to share how I do, cover myself when I have low income months on that end, on the personal end as well. But if you want to do this through your business, which for a lot of people they need to do because they also need to be able to manage their business expenses, this is a really good way to approach it. So let's say, the first 2 months of, let's call it the year, just to simplify things. So January and February, things are pretty normal. They're pretty average. Maybe you're making $3,000 of revenue in your business, or 10,000, however, what your normal is. Just figure out what that normal is. We're going to start with $3,000. So let's say you have $3,000 for each month, both in January and February. And so you take that $3,000 in revenue and you figure out, okay, what's the percentage I need in taxes, profit, and business expenses, and personal income? And you basically just split it that way and send it out to its respective accounts. You do the same thing in February. But then March is your big launch month. And so you're launching a new program, or maybe you are launching your coaching and everyone is paying in full, and you get $10,000. This is an outlier month. This is a month where you're not going to go and pay yourself, this enormous amount. Let's say you give yourself 1/3 of your revenue for personal pay, just to, again, make it easy. So in January and February, you paid yourself $1,000. And then in March, you get $10,000. Well, you're not going to go and pay yourself $3,333 because that's 3 times the amount of money, more than 3 times the amount of money you typically make. And we also don't know what's going to happen in April and May. And if history repeats itself and you're kind of looking back to last year and going, I don't want to pull my hair out again, most likely April and May, you're dropping in revenue to maybe just $2,000 or $1,000, which means if you're only paying yourself 1/3 of that revenue, you're only getting, oh gosh, this is where my math comes into play, $700 all the way down to $300. And so that's not ideal. Because your life, you still have life to live. You still have things to keep up on and bills to pay in your personal life, as well as your business. So what we want to do here is, okay, when we are in March, when we have those big income months, we're going to apply percentages to take the taxes out because we need to do that. And we're going to apply percentages to take the profit out. And then we're going to understand, what does that normal month look like? And in fact, you don't necessarily have to do it this way. You could not apply the taxes and the profit unless you're close to paying a quarterly bill, and then maybe you'd want to. But at the end of the day, once you get to the end of the year, if you do have enough to cover your quarterlies, or if you choose not to cover your quarterlies, then you can just do it from the full year standpoint. But if you're launching on a quarterly basis, then you can look at that big launch month, figure out, okay, I made $10,000, but I launch on a quarterly basis. So I'm going to divide this big launch by 3, put the 2/3 of it, so that would be, about $6,000, 6,000 something, put that into a separate account that I'm calling my drip. Or if you're specifically only worried about your owner's pay, it could be an owner's pay holding account. But if you need to cover business expenses too, then put that remaining revenue into the drip account and only use the, typical average amount, like the $3,000 in your account that you're going to split up into taxes, profit, your own pay, as well as the business investments account. So you're still basically normalizing and creating consistent income out of your business and into your personal account so you can continue to pay your bills. Then next month, let's say you only get $1,000. Well, you can also take the $3,333 out from your business, your drip account or your hold account, and bring it into, I like to have an income account, and then I can take the total amount of that and parse those into my 4 respective accounts. So I'm actually getting a little bit of a raise because I have the $1,000 in revenue plus $3,333. So now it's up to $4,000, but then that's still fairly normal compared to, instead of having a big launch $10,000 month. And again, I can separate those and then go about paying my normal bills. And then in May, when again, I have a little bit lower month because I had that big launch and so I'm not so focused on selling, again, I can go into that drip account, bring it into my income account and separate that out. So that's one way you can normalize being able to pay your bills. Now, for other people who maybe they have a big launch month, so again, let's say big launch in March, but then big expenses month in April, because in April, all the people that signed up for their program get to go on a retreat with them and they have to pay these bills. We also want to make sure we're accounting for that. So maybe in March, when you get that big income month, you figure out, okay, how much do I need to set aside for profit and for taxes? And what is the percentage that I need to set aside for business expenses as well as owner's pay? And then maybe you do put part of your money into the hold account for your owner's pay, because you still want to regulate how much you get paid from your business. But then you're also looking at, okay, I'm going to, pay myself a normal amount for my business investments this month, but I'm going to set up a separate business investment hold account because I know that I'm going to have a big high expense month for next month in April when I take everyone on this retreat and have to, pay some really high costs. So you're essentially earmarking money, but you're not letting it go into your main operating account, because a lot of us will look at that operating account in March and go, oh, I had a huge month. I'm going to, buy all these other things or hire someone or whatever. And then we forget about these really expensive months that we still have coming up. Another example would be if you have a few big launches and then you hold a really big retreat at the end of the year and you want to start, saving for the costs that are going to come up there, you would want to have a separate hold account specifically there for you to save into, knowing that you're going to have a huge high cost month at the end of the year to pay for these major bills that are coming up. So you want to be able to obviously maintain your month to month bills, as well as the random, quarterly or annual bills that might come up in your business. But you also want to be able to set aside money for these bigger things. On a personal level, I always do this with my clients where I have them set up something like a travel account, because they know they're going to travel, once or twice a year and go on a big trip. And so you might have your regular month-to-month bills to live your lifestyle. But then I also have them set aside money knowing that a big trip is coming up and they're inevitably going to have to pay for that. Might as well start saving for that now. So we can approach our business and our personal finances in terms of the cash flow planning in very much the same way. And although it feels like that's going to be so much work to set up all these accounts, it is so much easier on your brain and your natural behavior as a human being and an entrepreneur who wants to give their business the whole world, but you got to set those boundaries in place to make sure that you're not overspending on your business when you know, or you have an inkling that you're going to have a really expensive month coming up, or maybe you have a really low revenue month coming up and you're going to need to be able to have some sort of buffer to pad yourself for that. So having these internal business accounts is really important. Not a lot of banks offer multiple bank accounts, unfortunately. I know Bank of America is really good. Capital One Spark Business is really good. However, they're kind of on a hold pattern right now, waiting to see if they're going to let more people enter their business banking, which makes me really sad. I am a customer of them and I'm a big advocate of them, but you can continue to look them up in case they do, turn things around and get more people into the bank. But alternatively, you can have kind of your main business bank account and then set up a separate account that might be a personal bank account. But if you want to hold money, especially in terms of like a buffer or a drip or a hold or an emergency fund, however you're going to call it, and you want to set that up, it can actually be better to send that out as a distribution to a personal account, holding it in terms of an emergency, and then basically reinvest that back into your business when you are having these kind of expensive months or big cost months, or you just need to resupplement your income because you're having low revenue months. So I know this is a lot of information. I know it is probably like drinking out of a fire hose for a lot of you, or you're feeling a little bit intimidated about all the accounts or all the numbers or all the movements of money. And that is why I provide private coaching for those who are trying to go through and build their business and create systems and organization that makes them see that making and managing money can be easy and effortless, but we got to get the system in place and get the mindset right. So if you're interested in working with me in terms of coaching, private coaching, I do offer that, and I have several spots opening up this fall, and you can sign up with me. Actually, just shoot me an email at this time. I'm working on my landing page. Shoot me an email, tess@wanderwealthy.com, and we can chat it out there, get you on a discovery call, and see if it's a good fit for you. Welcome, Melissa. Thanks for joining the live podcast. So the last couple things I wanted to touch on before the podcast is over today is to understand how to determine your paycheck from your drip account, how to understand how much you need in terms of your need goal. And like I said, going through all the things that I mentioned at the early end of this podcast, all those different categories is really good to make sure you know, okay, what are my costs going to be? And not to move on to your want goal, not to move up a notch to what would I like my, lifestyle to be, and would I like my business to pay me, until you've been at your need goal and hitting your need goal and the revenue is proving to be coming in consistently, or you have a good rhythm in place to have that revenue be, put into a drip or a hold account to then pay yourself for a few months. I would say 2 to 3 months. I think I said 1 to 2 earlier, but definitely 2 to 3 months, maybe even 4 if you want to be conservative. If you do have high revenue months, then just setting it aside until you can go, okay, now is the time where I can tick up what percentage of my revenue I'm going to be paying myself. So don't go to that want until you're ready. The other thing is, if you are not capable of hitting your need goal, or maybe your want goal in a specific month. So if you're making money, and like I said, maybe you have a $1,000 or $2,000 month, and in the past you're pretty standard on a $3,000 or a $5,000 month in terms of revenue. So that means if you're only paying yourself like 1/3 of your revenue in terms of personal income, then you're going to have a low month. If you don't have a drip or a hold account in place within your business, then maybe you can look to outside of your business. So this is also really good for people who are self-employed that aren't necessarily in charge of their business account. And you can still add this, you can still create this system if you are an independent contractor or some sort of 1099 employee. You can create this, and you probably should still create this, because if you are an independent contractor or 1099, you most likely have business related expenses, so you should be separating your business from your personal. But something that I do as an additional layer in my business is have my emergency savings fund as on a personal level. So I actually have 12 months of emergency savings. So these are fixed costs. And then whatever my monthly fixed costs are, I multiply that by 12 and I save for that. I am a money coach. I am also a psycho. So I save 12 months. This is not necessary for most people. And in fact, I do have half of that invested and then the other half sitting in in a liquid savings account, but the other half is invested. So I do have kind of plans for that, but I did go a little bit overboard and save 12 months. That isn't necessarily necessary in terms of running your own business. You can actually do, I would say 6 to 9 months of fixed living expenses. And again, this can be your need expenses, having that in an emergency savings. And this is a really good threshold to hit at the very least 6 months if you are planning to go off on your own full-time in your business, and take away the supportive reins of maybe your full-time job or your parents or your partner. So having a good emergency cash cushion, because entrepreneurship is unpredictable and it always ebbs and flows. So setting that up can also be a really great way to supplement when income is low. So if you do have a low income account, but you want to still have consistent income from your business, you're going to take your percentage of your revenue still. So you're going to get something from your business, but then you also want to maybe supplement, because this is just kind of a freak low month, or it's that time that you haven't quite prepared for yet within your business. So you're going to supplement that outside of your business from your emergency account, so you can still pay your bills and you don't have to go into default of not, paying your rent or paying your mortgage or paying your cell phone or your utility bills. It is so much worse to go into debt or to not pay your bills than to use your savings. That is what emergency savings especially are for. So use it for that purpose. Don't use it to go shopping, because whether you have savings or not, you don't need to you can't not pay your bills if you're shopping. You could put it on credit, but then you're going into debt. Or you could use your emergency. That is not something that we choose. We go shopping if we have excess money, not if we're, really scraping by and going, oh, how can I still buy this thing? We only use our emergency fund instead of debt or not paying our bills if we have bills that are coming through that we didn't make enough money from our business to pay for. So make sure you have very clear boundaries about what your emergency savings is to be used for before you get into that. But do start, if you haven't already, have an emergency savings on the personal side. And then if you know, hey, my business is cyclical, or my business ebbs and flows, or I have a quarter launch business or a biannual launch business or an annual launch business, then you want to plan your income appropriately. You want to have a system in place that's going to more so regulate your personal income and your business investments, the way that your essentially business operating expenses account gets paid from your overall income account or from the revenue in your business, so you can more easily regulate the cash flow in your business. That is the hardest part about being a business owner, especially when you get past being able to make those sales, being able to get consistent clients, and now you're going into just trying to grow your business and deal with these ebbs and flows in cash flow. So I hope that is helpful to you all. If you have any questions, feel free to reach out to me. You can email me, tess@wanderwealthy.com, or you can, especially if you're listening to this podcast and you want to share it when the podcast does go live, for those who are in the Facebook group, go ahead and re-listen to the podcast. I say exposure therapy really works in finance, especially if you feel overwhelmed or confused or like it's way too complicated. Money can be very easy, and it's just about exposing yourself to the language and to thinking in the way that good financial strategists think. So you as an entrepreneur also get to be a financial strategist, and we don't want to shy away from the money aspect, even though it feels like, oh, I should just hire someone to do that. Every decision you make has a financial component, so you want to make sure you are taking ownership of this. So if you're listening to this, take a screenshot, share it on Instagram, and tag me at Tess_Wicks. And then, of course, if you have any questions, you can always send me a DM, and I will be able to answer that to you or jump on another podcast episode and answer that there. So thank you for joining me today. Remember, you can get my Easy Profit Roadmap to define your purpose-driven revenue goals and figure out your percentages of how to essentially separate the revenue into the specific purposeful funds or buckets or sinking accounts, however you want to call it, for your business. You can figure that out through that roadmap, and you can download that for free by going to wanderwealthy.com/roadmap. And then if you want to do this work on a deeper level and you want to implement mindset work, figure out what's been holding you back, where you've been sabotaging yourself when it comes to making money in your business and being able to manage money with ease, as well as implement the practical aspects of the Easy Profit Roadmap and what we talked about today, you can join me in my Payday Party. So I'm hosting a Payday Party at the end of August. I believe August 26th is the first day. And if you want to get on, I'm calling it the guest list, but it's also a wait list, to find out when the registration will be officially open for this party, you can go to wanderwealthy.com/party. You can also see it. It's at the bottom of the Easy Profit Roadmap, and I'll tell you a little bit more about it there, as well as at wanderwealthy.com/party. So go check it out. I'm so excited about this. It is one of the most favorite things that I have created. For those who have been through the Guilt-Free Spending System program, it is very much like this, but there's never any harm in going through it again. So if you want to join me for the fun kind of rebranded Payday Party, we are going to have a blast of a time talking about mindset and practical implementation for your business finances and how to stop shying away from money and really take control and ownership of your finances, both on a business and a personal level. So wanderwealthy.com/party to find out more about that. Get yourself on the guest list, and then I will let you know when registration opens, because we are going to host this party. It's a week-long workshop style party from August 26th until early September. and it's going to be super fun. So you can do that. And then, of course, if you are looking to take this to an even deeper level, maybe you want to skip past the payday party and really just work on this on an individual, private basis with me in one-on-one coaching. I offer 6 months of one-on-one support. We chat every other week. We talk about money. We talk about the practical implementations. We also talk about mindset. And if you're interested in that, email me, tess@wanderwealthy.com, and we can chat about it and see if it's right for you. So I am so excited to have all these different ways that we can work together and that I can provide you guys the value and the learning and the education and knowledge of how you can make money and manage money easily in your business and your personal life. So I'm super excited to get into the fall and see how we can make your goals in your business come true, make them happen. So go to the description of this episode to find out more ways that we can work together, to download your freebie, and to hang out with me further. Thank you so much for tuning in to this podcast, both to the live viewers and to those who are listening. If you want to tune into the next solo show live, if this has all worked for me, I really hope so. If you want to tune into the next solo show live, you can join the Wealthy Entrepreneur. Go to wonderwealthy.com/TWE group, or just search for it on Facebook, and we can see you live next time when the next solo show happens. I do one every other week, so you'll get exclusive early access, and you can ask any questions that you want. And I'd also love if you guys have requests for topics you would like me to cover in the next solo show. Hit me up within the group, and I will be taking those suggestions first come, first serve. Okay, I will see you all later, and I hope you wander wealthy.